Good evening everyone, welcome to the official YouTube channel of Officers Adda 24/7. So first of all, let me know how are you all, and also let me know in the comment section is audio video both are okay, are we good to go? So this is the new series that we started for all of you. So as you know, we were having the Achiever series. In Achiever series we have discussed all the units. It means all the 45 units we have discussed in the Achiever series, and now we are starting the another series in which again we will be discussing the same 45 unit, but now the questions will be advanced. When it comes to the Achiever series, we have discussed the nominal questions, or I can say the one-liner questions, but now we will be having more advanced questions, like the typical type kind of questions. Typical in the sense, like let's say for example, statement based questions, filling the blanks questions, match the following questions. So these type of questions we are going to have in this series, and this is our first day of this series. As you can see, this is for your victory batch. So the series is your victory series, in which we will be discussing each and every unit of your IE IFS. Okay, so before moving forward, I will be your mentor for IE IFS and PPB for JAIIB exam, and this session will continue from now onwards, Monday to Saturday, only on Officers Adda 24/7 in the evening at 7 p.m. Okay, and these sessions are very important for all of you, so do make sure you regularly attend this session or watch recording of this session as per your time schedule, but do not miss any session right now. Okay, so let's start. And if we talk about today what I am doing here in this series, so this is our first class. As you can see, it is saying that this is the class 1 of your IE IFS victory batch or victory series, I can say. So in this, what I am doing, first of all, we are discussing IE IFS subject. As you know, in this subject I am starting with the module D. So first I will be covering module D in advanced questions pattern, and then I will move forward to another modules. Why I am starting from module D? Because you can see it starts from the unit number 29 and ends at the unit number 45. A lot of content, or I can say a lot of topics and subtopics are there. So the big syllabus module D covers, and if the syllabus is big, it's very obvious the number of questions will be more from this particular module, and we will be needing proper time to revise the content, to practice the content on the before the exam. At least 2 times revision is mandatory for your syllabus. So that's why I'm starting from module D, starting from the unit number 29. Then I will go forward till towards your 45, then module C and A and B we will be discussing. Okay, so if we talk about today's topic, we are going to discuss today the first unit of your module D, that is financial markets. Okay, so do remember IE IFS, these victory sessions we are starting from the module D, unit number 29. This is our first class, and regularly you have to join this batch or this session at 7 p.m. only on Officers Adda 24/7. Okay, so let's continue. And if I talk about financial market, what actually is financial market? So as we have discussed in the one-liner question series as well, that financial system is simply a system where we exchange funds among the persons who have surplus money and the persons who have deficit of money. So when we exchange these funds among these people, that system is known as financial system. And there are people who have surplus money, there are people who have deficit of money, and to exchange funds among them we need a platform. We need a such kind of platform where we will be capable of making sure that the money will be exchanged among them. So let's say I am the individual person, so I am the party here who have a surplus money, and you are a businessman and you are starting your business, so you are a party of deficit of money. So now I do not know you and you as well do not know me. How we are going to fulfill our needs of capital? So we are going to do that with the help of financial market. So financial market provides us a platform where two parties can come together and exchange their funds with each other to fulfill their requirement of money. Okay, to fulfill what? To fulfill their requirement of money. That's why the financial markets we have here. Okay, now next, if I talk about the further you can see there are segments of financial market. There are what? There are segments of financial market. In financial market, we are using financial instruments to fulfill the need of money for short term, long term, or the different durations. So there are segments of financial market, and when it comes to segments of financial market, we have money market, we have capital market, we have derivative market, we have debt market, we have credit market, we have insurance market, we have pension market, we have mutual fund market, etc. All these are the segments of financial market. They are what? Acha, we also have foreign exchange market. Okay, so all these are what? These are the segments of financial market, and all these segments of financial market we have to cover in the unit number 29 of yours. Okay, in which these markets will be covered by us. Now the next thing is, if you talk about the other chapters of your module D, so you will find we have a money market, capital market, we have foreign exchange market, we have merchant banking, we have derivative market, we have your mutual fund market, we have insurance product, we have pension product. So first of all, in unit number 29, we are just going to study the introduction of all the segment of financial market. We are going to do what? We are going to study the segments of financial market. It means what actually the money market is, what is capital market, what is your derivative market, what is your debt market, just the introduction of these market. Because in the further units, we are going to discuss each segment of financial market in detail. Every instrument under the market will be covered in the individual unit. Okay, and as we know, financial market have a certain segments, and the different segments of market will be regulated by different regulatory bodies. Okay, so like here, if I talk about money market, regulated by RBI. If I talk about capital market, regulated by SEBI. If I talk about forex market, regulated by RBI. The merchant banking, regulated by SEBI. This is the only type of banking. Merchant banking is the only type of banking which is regulated by SEBI. Now derivative market, regulated by SEBI. Mutual fund, regulated by SEBI. Insurance product, regulated by Insurance Regulatory and Development Authority of India. Pension products, regulated by Pension Fund Regulatory Development Authority. So these are the regulatory bodies of the different segments of market, or I can say different financial markets. So do remember who regulates which market. This is important, Hana? This is very much important. Apart from that, today's topic will be financial market, in which we are going to discuss the introduction questions of the financial market. Okay, so I guess till now everything is clear to all of you. Now let's move forward and talk about the first question. So you have to answer, and I will let you know if your answer is correct or not. So the first question, acha, I have prepared, what I have done, I have prepared the individual question on each and every segments of market. Okay, in which on each and every segments of market. So first we have a question on the credit market. This is what market of your, this is the credit market that's regulated by RBI. Who regulates this? RBI regulates this market. That's a credit market. Okay, apart from that, if we talk about the major institutional preview of credit in India are dash. The non-institutional or unorganized source of credit include dash and sellers for trade credit. An important aspect of the credit market is term structure, which is dash and long-term credit. So with banks and NBFC predominantly cater to short-term needs, financial institutions provide mostly medium and long-term funds here. So these are the four options in front of you, in which you have to answer which of the following is correct. Let me know the right answer. A, B, C or D, which of the following is correct? Okay, so the right answer is actually the first one is talking about institutional previews, means the formal financial system. And if you talk about non-institutional, that's a informal financial system. That's what? That's an informal financial system we have. Okay, so first we have here institutional, that means a formal financial system. Non-institutional, it means an informal financial system. So when it comes to the formal financial system, who are the parts? Banks will be the parts, all India financial institutions will be the part. So all the three first options of the filling the blanks is correct here. Okay, second is talking about your non-institutional, it means informal. So it covers here money lender, indigenous, bankers. Here it is saying development financial institution, they are not informal financial system part. So the B option have been eliminated. Okay. And the third one is saying NBFCs. NBFCs again are not a part of your informal financial system. This will also be eliminated. So now you have two options, A and D. So now let's cross check the A option. First is saying the major institutional preview of credit in India are actually banks. It is actually banks. Banks include your commercial bank, cooperative bank, differentiated bank. Differentiated bank means a small finance bank. And non-banking financial institution, we have NBFCs. Then the second filling the blanks is saying that the non-institutional or unorganized source of credit include the money lenders, the sahukars, the indigenous bankers. That is also true. And when it comes to the term structure, so the term structure we have short term, medium term and long term. So here we have short term, medium term and long term. So the right answer will be A option. The right answer will be your A option. Okay, right answer is your A option. So right answer will be your A. Next question. Money market performs the crucial role of providing a conduit for equilibrating short-term demand for and supply of funds, thereby facilitating the conduct of monetary policy. The money market instrument mainly comprises dash. So you have to answer money market is actually, this is the second question based on the second market. So that is regulated by RBI. It's a short-term market. Short-term financial assets will be used for what purpose? To raise capital. And these are the close substitute of money. Clear? So the right answer here will be your, which of the following? A, B, C or D? And when it comes to the money market, first is saying call money, second is saying certificate of deposit, third is saying intercorporate fund, second is saying treasurable, other short-term government security transaction, repos, banker acceptance, commercial bills, commercial paper, and the D is saying all of the above. So which of the following you think is actually a part of your money market instrument? A, B, C or D? Which of the following is correct? Achha, just now I got an information, I am recording this session and I got an information that your JAIIB May 2023 dates are out. Your dates are out, guys, and your first paper will be 25th of May. That will be your IFS. Second paper will be PPB, that is 26th of May. Now this is a big challenge because in IFS and PPB there is no gap. 25th of May you will have your IFS, 26th of May you will have your PPB, 2nd of then you will have a gap of 1 week, then you will have AFM. Yeah, on 2nd of June you will have AFM and 8th of June you will have retail banking and wealth management. So your dates are out just now and I'm informing you in the recording session. 25th to 8th of June you will have your dates of JAIIB May 2024. Okay, now the right answer for this question will be D, all of the above. In the end I will show you the website as well for the details. So right answer is all of the above are actually the instrument of money market. So money market is a short-term market and includes all these kind of instrument. Call money is for overnight, certificate of deposit is for 7 to 364 days. Intercorporate funds is simply your unsecured instrument that corporates give loan to each other. Treasury bills issued by central government. There are state government securities also, like state development loan. Repo transactions are there. Bankers acceptance, commercial bills, commercial paper, all are there. Now, right answer was D. Now, the third question is about the third market. And the third market we have here is a debt market. Debt means a loan market. Debt means always a loan we are talking about. So, it consists largely of government security and to a smaller event corporate bonds. The government securities is a tradable instrument which is issued by central government or a state government. And it is a document of the government's debt obligation. So, long-term securities are also issued by state government and these are called dash. The securities which are issued by state government. Okay. Next, companies raise funds for longer periods, say 5 years to 10 years, through issue of a typical long-term debt instrument that is known as dash. So there are 3 filling the blanks you have to answer. First of all, let's eliminate the option. The first filling the blanks is talking about the long-term security that are issued by state government. And we have treasury bills here. So we have discussed a lot of times, treasury bills are issued by central government, not by the state government. So the A and C option have been eliminated. Now further, if we talk about long-term securities are issued by state government, that is state development loan. Second, when the company issue 5 or 10 years longer period security, that's not a part of your equity. Equity is a share. Equity is not a part of debt market. Equity is a part of your equity market, that's a capital market. If you're talking about debt market, debt means those instruments which actually takes loan from the market for a certain fixed maturity period with the fixed rate of interest will be paid back. So right answer will be your here B option. The state development loans are the state government securities. The companies issue corporate bonds, and for the infrastructure, companies can issue debentures. And these 3 are your what? They are the debt instrument. All the government security, bonds and debenture, they all are the debt instrument. Whether it is a central government security or a state government security, they are a debt instrument. So right answer was D. Sorry, B. Right answer was your B. Okay, next question. Now, next question have next market in it. Let's say foreign exchange market, which is regulated by RBI. Who regulates foreign exchange market? RBI regulates the foreign exchange market. Okay. So consist of banks, that is authorized dealer, who are allowed by RBI to participate in foreign currency. Those are known as authorized dealer. Then we have customers and RBI. So the forex in India developed practically only after dash. Now, if you remember the year, you can easily eliminate option here. It is 1999 or 1978 or any other year. Hana, if you remember the year, you will be easily able to find the answer or eliminate the option. Let's move forward. Prior to that, banks were permitted to conduct only merchant transaction and their cover operation. In the same year, banks were permitted by RBI to take trading position as well. So now next we're talking about post-liberalization. It means after liberalization that happened in 1991. The economy was open to a great extent and India became practically convertible on dash account. So India became convertible in capital account or current account. So now you can eliminate answer here. And that will be your current account, not a capital account. So if we talk about balance of payment have 3 types of accounting: current, capital and your financial. And you have in your syllabus 2 types of accounting, that is current and capital only. So current account is allowed by RBI to have a fully convertibility. Fully convertibility is allowed here, but in the capital account, it is not fully convertible allowed. So that's why you can eliminate the A option. Now next is saying this led to increased turnovers in forex market, which rose approximately $6 billion daily in 2000 to $70 billion daily at present. So which of the following? Both are same. Actually, the right answer will be 1978, the current account and the $70 billion daily. So you will only be able to answer this question if you remember the data of the content, like the year of the content. So in 1978, RBI allowed banks that yes, you can participate in the trading of your forex market. Before that, banks were not allowed to participate in the forex market. So right answer will be your C option. Okay, right answer is C. Next question. Next question we have, which of the following statement Which of the following statement is correct about derivative market? So next question, next market we have, that is the derivative market regulated by SEBI. So derivative is a product whose value derived from basic variables that is known as your what? That is known as your underlying assets. So derivative value will be decided on the basis of what? On the basis of your underlying assets. Okay, so these are the 5 statements in front of you. Do read them and let me know which of the following will be right answer. Okay. So here the right answer will be your first is saying its value changes in response to the change in a specified interest rate, security price, commodity price, foreign exchange rate, index of prices or rates, credit rating or credit index or similar variables, which is called underlying. So this is true. Obviously derivative value will be derived from another product. So this is true. Second, it requires high initial net investment. High initial? No, it requires zero or no initial net investment. So this is wrong. The first is correct, second is wrong. It is settled at a future date. That is true. Derivative will always be settled on a future date. In India, different derivative instruments are permitted and regulated by various regulatory body, that is RBI and SEBI. This is true. So first is true, third is true, fourth is true. Now the fifth is saying derivatives are of 2 types. The first one is over the counter derivative, second one is exchange traded derivative. This is very much true. Over the counter derivative have a counterparty risk. Now what does counterparty risk means? It simply means that the other party in the future can somehow breach the contract. Okay, so it always have a counterparty risk, and exchange traded derivative includes the mediators here. And when the mediators are part of here, that means it means simply that what we can say, we are having a market or we are having a trading where there is a mediator, that will be stock exchange or multi-commodity exchange, and now there is no counterparty risk because now the mediator is available, which is a regulatory or a stock exchange which is registered by the SEBI, and they cannot perform any kind of breach in the contract. So that's why exchange traded derivative do not have any counterparty risk, but the second one, over the counter derivatives have. But if you see this will be looking like a true statement, but no, over the counter derivative do not include futures. Futures are the standard contracts. They are the part of exchange traded derivative because there is no counterparty risk in future contract. And the forward contract here, the forward contracts are actual part of your over the counter derivative because forwards are risky. There is a counterparty risk. So you can see fifth is also wrong. So second and fifth is wrong. All the other is true. So you can answer all except second and fifth. All are true except second and fifth. So right answer will be your D. Right answer will be your D. Clear? Next question. Next we have here okay. So we were talking about here capital market. So first of all, capital market regulated by SEBI. SEBI regulates the capital market. And when it comes to the capital market, long-term equity and debt market, capital market includes both the equity and debt market. So the capital market provides long-term debt and equity finance for the government and the corporate sector. By facilitating availability of long-term finance, the capital market mediates between the conflict of maturity preference of lenders and borrowers. So capital market is a long-term market. Okay, that is for more than 1 year market, we can say. And in the capital market, trading of equity and debt both happens. And the next thing is that the capital market also facilitates the dispersion of business ownership and reallocation of the financial resources among corporations and the industries. That's what we're talking about in the capital market. So in both equity and debt market, there exists dash and dash capital market. So if you are a part of, right, if you are a part of the paid batches, so you remember we have discussed the capital market have a two types of trading pattern. It means there are two ways for trading in the capital market, and those ways are primary and secondary. So primary market is also known as a fresh issue market or a first issue market, and the secondary market is also known as a market of existing securities. Whenever it comes the markets, whenever we talk about primary and secondary market, there are two types of trading pattern of the capital market. In primary market, the new issues will be given by the company, purchased by the investor, and in the secondary market, already existing securities will be sold and bought by the investor or the shareholders. So here the right answer will be actually both A and B, because I have done a little bit mistake here in creating the options. Primary, secondary, or you say secondary or primary, they both are same. Okay, so I have done a little bit mistake, but yes, the answer will be A and B both, because the primary market and secondary market, these two ways are there in the trading for the capital market. So do remember, capital market is regulated by whom? It is regulated by SEBI. It covers equity and debt, both markets. Now the next question, the next market, and because I can see here we are talking about Adda, so this is about the insurance market. So in an increasing competitive economy, the need for insuring against risk is well recognized. In India, the insurance industry is broadly classified into life insurance and non-life insurance business. In the wake of financial liberalization during early 90s, the Committee on Reforms of Insurance Sector dash chairman, you have to name the chairman of this committee, recommended in 1994 the opening up of insurance sector to private participants and institution of separate regulatory and development authority. Now accordingly, Adda Act was enacted in the year dash and separate insurance regulatory and development authority was set up. So there are two filling the blanks. First, you have to answer the name of the chairman. Okay. Second, you have to answer in which year this Adda Act was enacted. So you have to answer these two things. A, B, C or D. So which committee it is? It is A, B, C or D. So right answer here will be your, if it is an insurance market, it is actually your Malhotra committee. Always remember, if it is related to the insurance market, it's a Malhotra committee. If it is related to a venture capital, it is a Bhatt committee. So right answer here will be your A, that is R.N. Malhotra committee. And the Adda Act was established in the year 1999. Okay, in which year it was established? In 1999. Okay, so right answer here will be your A. Right answer is A, R.N. Malhotra committee. Okay, so there are many committees which have a different I can say, there are the committee have been formed for different reasons, but when it comes to the insurance, Malhotra committee is fixed. When it comes to the venture capital, Bhatt committee is fixed. If you talk about Rangarajan committee, if you talk about, let's say, your Narsimhan committee, a lot of time these committees have been created. Okay, now next, which of the following statement is are correct about mutual fund? So first of all, who regulates mutual fund? SEBI regulates mutual fund. Okay, who regulates mutual fund? SEBI regulates the mutual fund. Clear? Now next thing is, SEBI regulate mutual fund, though mutual fund also have formed as a self-regulatory body in form of MP, which is an industry body of mutual funds. The next thing is, we have a mutual fund operates through its asset management company. A mutual fund is a trust that collects money from a number of investors. A mutual fund scheme can be classified in open and close-ended. Mutual fund is a mechanism of pooling the resources by issuing units to the investors and investing funds in security in accordance with the objective as discussed in the offer document. So you have to answer here which of the following is correct about the mutual funds. So right answer here will be all are correct. All the statements about mutual funds are correct. So right answer will be all are correct. Do remember mutual fund is regulated by whom? It is regulated by SEBI. And the another thing is AMFI is simply a self-regulatory organization. Okay, so as we were talking about the insurance market, it will always have a Malhotra committee. Now the next question is talking about here, that is your, which of the following is are the function of financial markets. So we have discussed the segments of financial market, and on each segment I have discussed one question with you that will contain the introduction of the particular market. Now what are the functions of financial market that it is asking about? So you have option price determination, funds mobilization, liquidity, risk sharing, easy access, reduction in transaction cost and provision of the information, capital formation. Out of these you have to answer which of the following is the function of your financial market. So when it comes to the financial market, it obviously a platform where you make sure that the person with surplus money and the person with deficit of money, they come together at the platform and exchange their funds. That what actually a financial market is. And here if we talk about the functions of financial market, all are the functions of financial market. So your right answer will be all are correct. All are the functions of your financial market, right? Now, so right answer will be your C, all are correct. Now next question we have, which of the following is are the number of factors which determine the levels of price discovery? Which of the following is the number of factors which determine the levels of price discovery? First is saying supply and demand, second is saying attitudes to risk volatility, third is saying available information, fourth is saying market mechanism. So now price discovery is a very important concept. It's a very important tool for each and every market. It's not only for the securities like shares, bond, debenture, etc. It is for basic commodity as well. The decision of price making is very much important for this marker, for this jacket, for this shirt, for this mic, for this board, or all the shares, bonds, securities, each kind of security. So everywhere the price discovery is having a very important relation, having a very important what we can call it very important aspect of all the trading. Okay, so now which of the following are the factors which actually determine the level of price discovery? And each of these are the factors. Supply and demand, the market forces, very important factor which determine the price. Second, attitude to risk, how much ready you are to take a risk. Okay, then what available information you have, because whatever information you have available, the more information you have, the more sound decision you can take. Then the market mechanism. So right answer will be all of the above are the factors that tells you that level of price discovery. So right answer will be your D. Good evening everyone, welcome to the official YouTube channel of Officers Adda 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So as I have already informed you all that we have started the victory series in which we are going to discuss advanced questions based on your IFS syllabus, and this session is going on Monday to Saturday only on Officers Adda 24/7 in the evening at 7 p.m. So how to join? Simply you have to subscribe the channel and every day at 7 p.m. you can join this particular channel from the you can join this particular session from Officers Adda 24/7 YouTube channel. And what we are going to do in this session, we have started this series with the module D, because module D have major part of your syllabus, a lot of content is there, and that's why maximum number of questions can be seen from the module D only. And that's why we have started with the module D. As you can see, this is our second class. And when we talk about Indian economy, Indian financial system, module D, so these are the units that we have to cover under the module D. Okay, financial market was the first class we have started in the series, and today we are going to start the money market questions. So the second class will be of your money market chapter. So who regulates the money market? RBI regulates the money market. Who regulates money market? RBI regulates money market. So it's a short-term market in which short-term financial assets will be used to raise capital for less than 1 year. And this short-term financial assets will be the close substitute of money. That's what we are having actually here in case of your money market. Okay, so money market have a lot of instrument, call money, notice money, term money, certificate of deposit is there, commercial papers are there. We also have repos, we have tri-party repo as well, we have treasury bills, we have cash management bill, etc. All these are the instruments of money market. That's what we have to study in this particular unit. So when we are going to study the money market, like, do make sure one thing is very much important. These YouTube sessions alone are not sufficient to clear your paper. What you have to do, you have to have the clarity of concepts in your mind and then practice the question. That's what is required to clear your paper. So do your conceptual study. Without conceptual study, not possible to clear the paper. So do focus on the conceptual study. So when we are going to study the money market or unit number 30 of module D in the paid classes or in the conceptual classes, we will start from what actually the money market is, what it does, what are the different instruments in the money market, and each and every instrument have to be discussed in detail by us. It means each and every instrument, how many days, like what is the minimum period, what is the maximum period for that instrument, why this instrument will be used, who issue this instrument, is it secure, is it unsecured, all these things we have to cover. Okay, so in case of money market regulated by RBI, it's a short-term financial market which makes capable to the market participants to raise capital for short-term period that is less than 1 year. And to raise capital, we use call money, notice money, term money, treasury bills, commercial paper, certificate of deposit. Apart from that, we also have repos, tri-party repos, long-term repo operation, and targeted long-term repo operation. All these are the part of your fundraising instruments. Okay, so let's start with the first question here. And if you are joining this session for the first time, one more important information. As you all know, yesterday IIBF has given us the dates and the registration dates as well as the exam dates. So IE, IFS and PPB, they do not have gap between the paper. On 25th you have IE, IFS, on 26th you have your PPB paper. So we have to be very clear while we are studying or we are preparing for the JAIIB May 2024 paper that the syllabus should be covered or syllabus should be covered in such a manner that you will get 2 times to revise the whole syllabus. And for that, start early. And if you need help of any batches or paid courses, so the AIM batch is the batch which is the latest one on Officers Adda 24/7. This is the latest batch of ours, okay? And this batch is starting from 26th of February. From 26th of February, this batch is starting. If you want to enroll, use the code Y496, you will get maximum discount. That's the AIM batch, okay? So let's start with the first question. It is talking about the treasury bills. When it comes to the T-bills or treasury bills, it is the central government security. State government cannot issue treasury bill. Who issues treasury bills? Central government issues treasury bill. So which of the following is correct about treasury bill? First statement is saying they are money market instrument offered for the purpose of financing short-term debt obligation of the government of India. Second, there are 3 types of treasury bills, that is 91, 182, 364 days, okay, on the basis of competitive and non-competitive bidding, process of auction, treasury bill can be utilized. Then another statement is saying the investment in the bills may be made by any person who is resident in India, including state government, firms, companies, corporate bodies, institutions, trust and retail investors. Like all these can participate or can purchase or do the investment in the treasury bill. Third is saying NRIs, OCIs, FPI are eligible to invest in the treasury bill, but they are subject to approval of the government and provisions of FAMA Act 1999. So the first statement talking about what is treasury bill and what are the types of treasury bill. Second statement is talking about who can invest or who can participate in the treasury bill transaction. And the third one is talking about that NRI, OCIs, FPIs can also participate, but they have to take approval from the government as well as they have to be allowed according to the FAMA regulations. So you have to answer which of the following is correct about your treasury bills. A, B, C or D. Which of the following is right here? Okay. So the right answer for this particular question will be all of the above. All are the correct statement about treasury bill. All these statements are correct about treasury bill. So the right answer will be your all of the above. D option. Okay. Now the second question is talking about which of the following is correct about CD. Now what is CD? That's a certificate of deposit. So which of the following are correct about your certificate of deposit? So it is a negotiable money market instrument issued in dematerialized form. It means in electronic form by scheduled commercial bank and all India financial institution that have been permitted by RBI to raise short-term resources. Okay. Second is saying while their tenure of issue can range from 7 days to 1 year, most certificate of deposit are issued by bank for 3 months, 6 months and 12 months tenure. This is the most used, okay, or most issued, but the timing or the duration minimum will be 7 days, maximum 1 year. Next we have now, certificate of deposit can be issued to individuals other than the minor, corporations, companies, trust fund, association, etc. Fourth is saying NRIs are also permitted to subscribe to certificate of deposit. Fifth is saying the minimum amount of CD should be 5 lakh and thereafter it should be multiple of 5 lakh. Okay. Now, you have to answer out of these 5 statements which of the following is correct about certificate of deposit. So now, because certificate of deposits are issued by banks and financial institutions, that's why they are secured instrument. Okay, that's why they are what? They are secure instruments. So the right answer will be only 1, 2, 3, only 2 and 4, only 4 or all of the above. Which of the following you think is the right answer? Okay, so the right answer will be your all of the above. The right answer is your D. Okay, right answer will be your what? D. Next question. Filling the blanks question is it? It is. So first is saying the tri-party repo is a type of repo contract where a third entity, apart from the borrower and lender, there will be a third entity called a dash. Okay, and this entity acts as an intermediary between the two parties to the repo to facilitate services like collateral selection, payment and settlement, custody and management during the life of the transaction. Okay. The next statement is saying the tri-party repo system was introduced by Reserve Bank of India in August dash. So tri-party repo transaction is simply a transaction where apart from borrower and lender, there will be one more party. Okay, that's the intermediary. And it can be the party who can become the tri-party repo transactions third party that will be decided by RBI and government. Then the party will be allowed to act as a mediator or intermediary. Okay, now you have to answer here which of the following is correct. So first of all, the party who becomes the third entity, okay, between borrower and lender, that is known as tri-party agent. So it cannot be your merchant agents. It is not tri-median. So it is what? It is a tri-party agent. So half answer can be A. But what about the year in which it was introduced? Is it 2017? So answer will be actually A. the party who become the third entity here, that is known as tri-party agent, and it was introduced by RBI in 2017 to make it more easy for the lender and borrower to have the trading. Because when there is a tri-party agent, this is the responsibility of the tri-party agent to decide the collateral security, like which security should be taken as a collateral, like collateral management, and all the other things will be taken care, like the custody, settlement, etc. will be done by whom? It will be done by tri-party agent, and that's why RBI introduced this in 2017. So the right answer to the question will be A option. Okay, right answer will be what? A. Okay, next question is talking about the LTRO, that is long-term repo operations, was introduced by RBI in February 2020 at the time of pandemic. Which of the following are the objective of LTRO? Why RBI have introduced LTRO in the year 2020, or I can say at the time we were facing, or the world was facing, the pandemic? What was the reason out of these? So first is saying to encourage banks to undertake maturity transformation smoothly and seamlessly so as to augment credit flow to productive sectors. Second is saying to assure banks about the availability of durable liquidity at reasonable cost relative to the prevailing market conditions. Third is saying both. Fourth is saying only A. So why RBI have introduced LTRO? What is the reason behind introducing LTRO? So when it comes to the long-term repo operations, it was introduced by RBI because RBI have seen at the time of pandemic, the productive sectors were not getting the sufficient capital. They were not getting the sufficient money. And that's why, money means the credit. That's why RBI introduced this. And also to assure banks about the availability of durable liquidity, and that will be at a reasonable cost. Okay, and right answer will be both. Both are the reasons, or both are the objectives behind introducing LTRO by Reserve Bank of India. Okay, so RBI wanted to make sure that all the productive sectors will get the sufficient liquidity or the sufficient credit which they need. Okay, that's why LTRO was introduced. Now the next thing also was introduced, that in case of LTRO, long-term repo operation, it is very much important for us to make sure that the assets, or not the assets, but we can say the loan should be available by the banks at a reasonable cost, so that they will be providing funding to the productive sectors. And that's why repo operations have been introduced by RBI in a pandemic. So right answer is both. Both are the objectives. Now, a commercial paper, that's the another instrument of money market. It is unsecured. Why it is unsecured? Because it is issued by corporates. Corporates can issue the commercial paper. So a commercial paper is an unsecured money market instrument issued in the form of promissory note. The minimum credit rating shall be dash as per rating symbol and definition prescribed by SEBI. So what we are talking about here, corporates issues the commercial paper, and that's why they are unsecured, because it's a risk. But not all the corporates can issue the commercial paper. There should be a dedicated rating criteria. Accordingly, the corporate will be allowed to issue the commercial paper. So commercial paper can be issued for maturity between minimum of dash days and a maximum of 1 year from the date of issue. Next is saying the buyback offer can be made at prevailing market price only, not before dash days from the date of issue. Now, you have to answer which of the following is correct. And if you remember what kind of rating is required, you can eliminate the two options here. The rating is A3, A2 or BBB, or none of the above. So actual answer is rating is A3. Okay, rating is what? It is A3. Now, for the minimum maturity of the commercial paper, we have 7 days. So rating is required A3, minimum duration for the commercial paper is 7 days. And after how many days the buyback option is available? After 30 days. It means the right answer will be your A. After 30 days, it is allowed to the corporate that you can take a buyback from the market. Like let's say, for example, if people want to sell your security after a certain period, so you can take back that security from the market, but when? After 30 days completed of your date of issue. So the right answer will be your A option. Rating is A3 required minimum days are 7, and you can be you will be allowed to buy back the certificate. You are allowed to buy back the commercial paper after the 30 days from the date of issue of commercial papers. Okay, so right answer is A. I don't know why I keep saying certificate of deposit in place of commercial paper, but yeah, we were talking about commercial paper there. Okay, acha, the minimum amount in the commercial paper is same as the certificate of deposit, that is 5 lakh, and thereafter multiple of 5 lakh. Now, which of the following is that true about the bill rediscounting scheme, that is BRDS? Which of the following is that true about bill rediscounting scheme? That we can say it is a BRDS. So the minimum tenure of BRDS transaction is 15 days and the maximum is 90 days. The BRDS transaction is carried out on a discount basis and has the following feature, like first is interest is calculated on the actual or 365 days basis. Third is saying both. Fourth is saying none of the above. So what do you think? Which statement is correct or true about the bill rediscounting scheme? So bill rediscounting scheme was introduced by RBI to make sure that the proper liquidity will be available in the market and also to promote the bill culture in the economy. That's why RBI has introduced BRDS scheme. And the right answer will be both. Both the statements are correct when it comes to the BRDS scheme. Okay, both the statements are correct. So right answer will be your C. Clear? Next question. As part of TLTRO, targeted long-term repo operation implementation, RBI conducted auction of targeted term repos up to 3 years. That's the maximum duration, and the minimum is 1 year duration for the auction purpose. Of appropriate sizes for a total amount of dash up to what amount? Dash crores at a floating rate linked to the policy repo rate. Okay. So we have to answer here what is the actual amount that will be allowed here. What is the actual amount? Is it 1 lakh crores, 2 lakh crores, 5 lakh crore, 1.5 lakh crores? Now you can, if you remember this amount, the total amount, you can easily eliminate the other option and you do not even have to read the other part of the question. You can simply answer by the one answer. You can simply answer by finding out the true amount of the first filling the blanks. Okay, so second filling the blanks is talking about 4 tranches of TLTRO or auction by RBI, each with an auction amount of dash crores. On April 17, RBI conducted TLTRO 2.0 for an amount of dash crores. So they are asking about amount, and the right answer is actually A, because the total amount is 1 lakh crores and the 4 tranches happen of 25,000 crores and TLTRO 2.0 was issued for the amount of 50,000 crores. Okay, so do remember this amount, very important, and this is latest at the time of pandemic this have been done. So this is an important question. Okay, do remember these amounts. So right answer will be your A option. Next question we have here, that is talking about dash is a repurchase agreement entered into between eligible counterparties for borrowing and lending of funds on a collateralized basis. So we are talking about dash is a repurchase agreement, okay, which is entered into between eligible counterparties. For what purpose? For borrowing and lending of funds. On what? On the collateralized basis. So is it a repo? Is it a reverse repo? Is it a MSF? Is it none of the above? A, B, C or D? Which of the following is correct? A, B, C or D? Okay. So dash is a repurchase agreement entered into between eligible counterparties for borrowing and lending of funds, and that lending will be done on the collateralized basis. And the right answer will be your repo. If it's a repurchase agreement, that's a repo agreement. So right answer will be here A, repo. Next, dash are the 2 approved tri-party agents. So in the tri-party repo transaction, there is an agent, and that agent will be decided by government and RBI, as I have told you earlier also. So you have to answer right now which of these are the eligible tri-party agents. First is saying CCIL NSC, second is saying BSc NSC, third is saying SPM CIL BSc, and fourth is saying none of the above. So if we talk about SPM CIL, it is what? It is actually a Security Printing and Minting Corporation of India Limited. It's a corporation of Government of India which covers R4 press, R4 mint and 1 paper mill. All 9 units will be under the SPM CIL. All the security papers of Government of India and Post Office etc. will be prepared here under the supervision of SPM CIL. So it is not true. Bombay Stock Exchange, National Stock Exchange, both are not the tri-party agents. And the right answer is Clearing Corporation of India Limited. That's a clearing corporation of Government of India, and National Stock Exchange. These are the 2 approved tri-party agents. So your right answer will be A option. Okay. Right answer is A. Next question. Usance promissory note drawn by discounting bank against the underlying bills, where rediscounting the bills, actual endorsement and delivery of these bills are not necessary. So you are actually, let's say first the bank have discounted the bill of a client. Now the bank went to the other bank or financial institution to rediscount that bill from them. And in that situation, whatever bills you are giving as a security, that you do not have to endorse or transfer to the rediscounting bank. Okay. So instead this promissory note is delivered. Okay, since this note derives its value from the underlying bills, this is called dash. This is called dash. Which of the following is correct? A, B, C or D? BRDS, DUPN or BRDS again. First is saying bill rediscount schemes. Third is saying bonds rediscounting scheme. So you have to answer which of the following is correct. A, B, C or D? Okay, so the right answer here is actually this scheme is known as your BRDS, bill rediscounting scheme. The scheme named as what? It is named as a bill rediscounting scheme. Okay, but the question is asking about the bill, because its value will be derived from the underlying bills, and this bill is known as what? Okay, so this note is known as what? It is known as the derivative usance promissory note, because its value is derived from the other usance bills, and that's why the note will be known as a derivative usance promissory note, and this note will be traded in which scheme? That is bill rediscounting scheme. Okay, so right answer will be your B. Okay, done. So now let me know how many answers you have given here correct. And do make sure one thing, Monday to Saturday you have to join this session for IE IFS subject. No excuse will be accepted, because the dates are out now. I guess we are fully motivated now that we have to clear this paper, and actually we are getting 20 more days to clear this particular paper, because what happens till now, the first Sunday of May used to be your first paper, but now the 4th Saturday of your May is actually the day where your first paper is. So you are getting extra 20 days here, and that's why that's an opportunity for us, है ना? And that's why we have to utilize it fully. So do make sure you join these sessions on the regular basis. Apart from that, if you are looking for a dedicated batch where you can find the conceptual study as well, so this is the AIM batch starting from 26th of February. Okay, and to enroll in the batch, what you have to do, you have to download the Adda 24/7 application. After downloading the application, what should be done? Click on the page here, go to the home page of application. Let's say this is the home page of application, and then you have to find out here the exam category, and the exam category will be JAIIB CIB. So this is your exam category. Then go to the JAIIB May 2024, and here it's your AIM batch. AIM batch is there. If you want a test series, it is available. If you want a video course, it is available. Ebooks are available, and the hard copy books are also available for practice. Unlimited number of questions you can find to practice in these hard copy books that will be delivered to your doorsteps. So how to enroll? Simply click on the batch, do read the details, scroll down, find the study plan here, and you can check all the 4 study plan is updated. It means all 4 subjects have been started and or is going to start. I have already started IFS. PPB is going to start from 26. So how to check? Just click on the here point and you will find from 1st March your AFM is starting. Okay. If you want to check the retail banking classes date, from 26th of February your retail banking is starting. Your PPB is starting from 26th of February, you can see, and your IFS is starting from 26th of February. So all these batches are all this study plan is available. How to enroll? Just click on the buy now option. If you want more than 75% discount, then use the code here. That's a Y496 and click on apply. Once you apply, you will find 77% discount. 1% additional discount will be available if you use the coins on application. So 78% discount, 6 months validity, coupon will be Y496. Important date for all of you is 26th of February. The day we are starting your IFS subject as well as the PPB. Both the subjects are starting from 26th. Also the retail banking. Okay, so this is the whole information for all of you. Apart from that, if you want to regularly join these sessions on YouTube, then do make sure you subscribe the channel Officer Adda 24/7 and press the bell icon so that all the upcoming sessions notification will be given to you properly. Okay, so that's all for today. Let's end the session here. Thank you all for joining the session. Take care and I will meet you again tomorrow. Okay, take care everyone. Bye-bye.